Let's continue our discussion on the mid-year economic review. Anil Singhvi, the chairman of ICAN Investment Advisors, now joins in. Afternoon, sir, and thanks so much for taking the time out and joining in. In the statements that have come through on the mid-year economic review, does any statement stand out to you? How would you interpret it?
Not really, though of course I think it's on, if you look at the global events and the local events, it's on a more or less on the expected line. So I don't see that there's much of a thing to be read out of it. But the two factors very clearly, one is the fiscal deficit. I think we have talked enough on that whether 4.1% will be met or not. Looking at the global events which are so favorable for us in terms of low oil prices should favor us in terms of keeping the fiscal in check. But I think what it missed out really in last, if you look at the last 2 weeks or 3 weeks, I don't think the midterm review really captures what has happened in last 2 or 3 weeks when we're looking at the global situation. So it has talked about more of the domestic situation but not the global situation. So somewhere I'm a bit confused on that when we have presented it today, it should have been tempered with the situation which is there in globally rather than just looking at the local events.
Okay. Hi, Mr. Singhvi. I'll develop that point in a minute. There is a ticker that is running. Now, I must confess to you that maybe like you, we are also only reading the headlines that have been printed on the screen. Haven't yet got hold of the copy itself. Now, one of the lines is renegotiating double tax avoidance treaties. Is this just what you knew, or are you taking any renewed meaning from the statement?
No, I think this was an anvil for quite some time that we are looking at all double taxation treaties, because both India really needs to now look at the global scenario and work it out that how we want to negotiate our double taxation treaty agreements. So this has been going on for some time, and I'm glad that some statement of that nature has been made that we will review all the DTA because of the commitment which this government has made on account of black money. Now we have been taking a lot of shelter saying that because if we really ask for certain questions, we will have a problem in DTA. So we really need to renegotiate all our double taxation treaty, which is a step in right direction. But another point which I was making another day also, I was talking on that we have really been looking at local situation, and our entire focus has been on local situation. Whereas I think I'm a big fan of Raghuram Rajan, and here I would like to just draw a point that interest rate scenario has to be now looked into more from global scenario than from local scenario. And this is where I think going forward the focus the next 3 months likely to be that where the situation is in the globe is.
No, actually Mr. Singhvi, it's good that you brought it up, because we had this one statement coming in from one of the wire services that the interest rates expected to remain unchanged till March quarter end. It's a little difficult to interpret this because we don't know in what context it is being said, and we are being told by Finance Ministry sources to not pull it out of context. I don't have the context yet, but is this how we should understand it, that the government reckons there is a global problem and therefore it is should have take cognizance of all that?
I have been saying it for some time that we have put in so much of pressure on Dr. Rajan just about a couple of weeks back that he should have reduced interest rates on 2nd December. But I think when you look at the global scenario, when you look at evidences whether the low interest rates have really triggered the whole investment and capital cycle, I don't think, I'm not a biggest votary of this, that low interest rates only triggers the investment cycle. I think one has to look at the demand, and more importantly, if we are going to have a global scenario panning out next year where there is going to be more recession rather than more inflation in any of the global situation, I don't think really the interest rates will really make so much of a difference. If the global demand is going to collapse, we will have a problem on account of our exports. So when you look at many other situations, we have to really temper our expectations on the interest, and for time being, I think take a long breath and just hold tight on that. So I'm glad if government has made that kind of a statement, even in completely out of context, that till March the interest rates may look stable than going down. Is much better, because there's no point in taking one interest rate cut and then having a long pause, because that doesn't give you a direction.
Point taken, sir. Both of us are, of course, only looking at that.
But one more point I want to make it on midterm review, that our direct and indirect tax collections may have much lower than what was expected, because the budget was expected on a much bigger and much larger growth dimension, which we haven't seen last 2 quarters. So going forward, I think it will be very important to see how October, December and January, March GDP growth rate is going to be. Otherwise, we may fall little short of our targets on direct and indirect taxes, which to some extent can be compensated by low oil prices. So I think it's a more or less give and take situation.
Yes, actually we are a distance away from what we had anticipated by way of tax collections. The budget papers were expecting a 17% rise in revenues. I'm just rounding off the direct and the indirect tax revenues. What we have done is 5.7% on direct taxes and 7.5% on indirect taxes. We just had Dr. Pranab Sen saying that we will perhaps make it to double digits, but we are still going to be a little away from, or quite away from, that 17% budget assumptions. The budget assumption of GDP itself is a 13.4% growth in nominal terms. So that should be, that wouldn't have expected a 5.5% real GDP growth. It must have been at least a 6.5% real GDP growth and a 7% inflation. So clearly that 13.5 itself is not going to come. What is the ground feedback you are getting, Mr. Singhvi, in terms of papers moving in the government or action getting taken? In the last 3 or 4 weeks, we have got a lot of people from India Inc. Complaining that, the court gives you order that mining can restart, but we are getting just footballed between the centre and the state, that a lot of action which is purely executive, administrative, is not getting taken simply because it's falling between stools, or people are not feeling empowered enough. Are you getting a sense that things are not moving as quickly as could have done?
Lata, I think 2 things have happened. One is that the expectations and the bar of expectations were raised dramatically and considerably when this new government got voted in, and thereafter the delivery has been rather slow. So when you mirror it with what was expected and what was really promised versus what the delivery has been, yes, there has been a shortfall on that. But still, I think we have still more time left before we can really jump to the conclusions that everything has gone out of gear. And according to me, the February 15, the budget, the 28th February 2015 will be the most critical day for this government. Though, of course, Mr. Arun Jaitley made a statement in the last budget that not everything has to be done for the budget day. But I think even if you read that, nothing much has really gone between July and now. Look at even divestment program. Equity markets were really looking up so well just a couple of weeks back, and we did not put our foot on the pedal. So there have been some misses here, and these misses are really big misses. When you look at equity markets today or a global situation today, it looks like a daunting task. But 3 weeks back, it looked why government hasn't really done it. So when you look at many of these small, low-hanging fruits, then also government's actions have been really away from what was expected out of this government, which really meant so much of business. When they said that BJP means business and BJP means really doing proactively looking at the business decisions, I think this is where some amount of frustration is setting in. But I wouldn't give a judgment today. Would rather wait for another 2 months to see how this government really performs, and more importantly on 28th February.
All right. That, I guess, is what the Voice of India Inc. would also say. Mr. Singhvi, we appreciate you so patiently waiting by for the smattering of headlines that we have got and for your comments on how the economy and the market should read them. Thank you very much for joining us.